Welcome to Alpha Recap. Thanks for tuning in. We're wrapping up the pre-holiday session and walking through the big market moves from Friday. As always, if you have questions, you can reach us at stockalpha.ai.
Hey, great to be back. Friday was interesting. Markets closed up on a bit of a risk-on tilt, but underneath that were some noisy and uneven moves. So, what really stands out here is the mix of conviction and chaos.
Totally. The headline that grabbed everyone's attention was Intel. It jumped about 5.5% to $68.50 on roughly 107 million shares. That combination of price and heavy volume is exactly what technicians call conviction.
Right, and that's a big deal because Intel is a large liquid name. So when a core semiconductor stock moves like that on heavy turnover, algorithms and funds often notice and can start shifting sector weights.
The number that really caught our eye was the volume, 107 million shares. That's not a light day.
Yeah, that tracks. And it wasn't just Intel. Another smaller name rose about 6% to $13.90 on roughly 155 million shares. And the leveraged small cap inverse fund fell about 6% on about 166 million shares. All heavy participation.
Exactly. So the market breadth looked tech-led, and the indexes extended their recent strength. Analysts were pointing out that the Nasdaq is in one of its best multi-decade stretches. But, and this is important, that strength felt concentrated in specific winners rather than a broad-based rally.
Which is the tension of the day. Momentum in big tech names versus concentrated risk elsewhere. I mean, when you step back and look at this, you see two stories happening at once.
And speaking of concentration and weird moves, Friday had some wild single stock action. One specialist name plunged about 84% to roughly 17 cents on heavy volume. Ouch. And on the flip side, a microcap spiked about 63% to 7 cents. But that move happened on only about 1,300 shares.
Those microcap moves are the classic cautionary examples. Big percentage moves on tiny volume are often noise. They can reverse fast, and they can be driven by weird corporate events or low-float flippers.
Right, and that leads us into one of the core themes, volume as the tell. Heavy volume breakouts, like the large cap example we mentioned, tend to have a higher probability of follow-through. Low volume spikes, not so much.
Exactly. Analysts kept flagging that distinction. Big move plus big volume equals real flow and position adjustment. Big move plus tiny volume equals headline noise and execution risk.
Another important piece over the weekend was institutional activity. Magnetar Financial disclosed selling about $50.1 million worth of CoreWeave stock. Analysts said that kind of block sale can create selling pressure, or at least change liquidity dynamics in that name.
Right. Institutional reallocations versus retail rallies. That was a big theme. A block sale by a big player can depress a mid-cap temporarily, while options-driven retail flows can send smaller names skyward. The market can handle both, until it doesn't.
So we had momentum and big volume conviction in some names, institutional liquidity events in others, and microcap fireworks. And on top of all that, there are event risks heading into Monday.
Yes. Geopolitical tension around security in the Strait of Hormuz, and a big corporate catalyst, Tesla's earnings. Both were called out as binary events that could reprice markets when trading resumed on Monday.
Analysts were pretty unanimous that event risk was real. You had momentum on one hand and vulnerability on the other. So the tape looked constructive but fragile.
Totally. I mean, you could see a lot of people saying the index strength might be the start of a durable uptrend, but others urged caution, calling it a situational rebound susceptible to catalysts. So opinions diverged on the durability of what we saw Friday.
Let's unpack a few of those technical and structural points in plain English. First, why does heavy volume matter? It signals real money changing hands, funds, institutions, large options hedging. So price moves are less likely to be one-off spikes and more likely to attract follow-through.
And conversely, tiny volume big moves often come from thin float names or odd lot trades. Those can be amplified by a small number of participants and reverse quickly. So for listeners, volume helps you separate signal from noise.
Another technical point worth clarifying: leveraged and inverse funds. The small cap inverse fund fell about 6% on heavy volume, which analysts read as a sign of risk-on behavior in small caps, or a squeeze of levered short positions.
Right. And an important rule of thumb: leveraged ETFs reset daily. That can make short-term moves dramatic, and their path dependency means returns depend on intraday swings as much as closing prices. So heavy volume in those products demands attention.
Short reactions.
Big move, big caveats. In terms of who should care and how, long-term fundamental investors were told Friday's headlines are noisy, but not necessarily decisive. Analysts suggested focusing on fundamentals and earnings cycles rather than daily headline noise.
Active traders and momentum players got actionable cues from the volume patterns. Heavy volume breakouts can attract follow-through in the near term, but they also got a reminder to watch implied volatility and overnight news risk, especially with those two binary events we mentioned.
Portfolio managers and allocators were told to review hedging frameworks and liquidity assumptions. The Magnetar block sale of CoreWeave underlined that big institutional trades can create short-term dislocations, so contingency plans matter.
And speculative small cap holders were given a stark message. Thin liquidity and extreme intraday moves create execution and concentration risk. Seeing an 84% one-day decline in a name is a sobering reminder of that.
So, what would you say are the takeaways for the next session?
Quick list. 1. Watch follow-through volume in the big names. If heavy participation keeps up, momentum readers will say that increases the chance the move persists. 2. Monitor institutional flows. That CoreWeave sale could matter if selling continues or if it was absorbed quietly. 3. Keep an eye on geopolitical headlines and Tesla's earnings as binary volatility multipliers.
Add to that, treat tiny volume percentage moves with skepticism. Remember the quirks of leveraged products. And for traders, pay attention to options flows and implied volatility. Right. And the other thing is, size positions appropriately in thin names.
Let's run through the key metrics listeners asked us about. Intel, up about 5.5% to $68.50 on roughly 107 million shares. The small cap that climbed, up about 6% to $13.90 on roughly 155 million shares. The leveraged small cap inverse fund, down about 6% to a little over $5 on about 166 million shares.
CoreWeave, institutional sale disclosure of about $50.1 million. Analysts said to watch whether selling continued. The specialist name that crashed fell about 84% to roughly 17 cents on heavy volume. And that microcap spike, up about 63% to 7 cents on only about 1,300 shares. Classic thin volume fireworks.
Okay, 3 more short reactions.
Market felt both strong and fragile.
Yep.
Not what anyone expected in a holiday session.
Before we close, a few strategic considerations analysts emphasized. And again, this is framing, not advice. Treat heavy volume breakouts in large caps as higher probability near-term signals. Corroborate with options flow and sector breadth, and be mindful of the daily reset nature of leveraged products.
Also, when you see institutional block trades, monitor subsequent sessions for absorption or follow-through selling. And for portfolios sensitive to geopolitical shocks or single company earnings, define pre-planned risk management actions rather than ad hoc responses when markets reopen.
Final takeaways. Friday's tape delivered a nuanced message. Heavy volume strength in core tech names coexisted with event-driven fragility and flash volatility among thinly traded stocks. Volume patterns gave our best near-term signal for which moves might persist, but unresolved catalysts like the Strait of Hormuz developments and Tesla's earnings raised the chance of reversals when trading resumed.
Yeah, and remember, analysts note that disciplined sizing, attention to liquidity, and explicit plans for binary events are the most effective way to navigate a reopening. It's informational, not advice, just context.
That's our wrap. If you've got questions about anything we covered, head to stockalpha.ai, or you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the market reopens with reactions to any overnight headlines and the Tesla print. Stay curious and be careful out there.